Interest rates just spiked again. Let's talk about that and more in this week's segment of Market Watch. Hi there, Joshua Barks here, Associate Broker at Keller Williams Realty Boise and Team Lead of the Barks & Co. Real Estate Team. Thanks for being with us this week as we go over the market update. If you're new to the channel, we talk about the Boise area housing market on a week-over-week basis, and then once a month we go into a deep dive into the market dynamics. This week is just one of your mini updates, and let's just get right into it. First off, inventory. You may recall from last week, inventory after 18 weeks of increases, we finally saw inventory come down overall week over week. And this week, we actually stayed essentially the same in inventory. We have 1,691 active listings right now. Last week at this time, we had 1,690, so one more than last week. As far as the new listings coming to market, that also stayed about the same. We had 185 new listings come to market in the last 7 days, and the week prior we had 190. So just a little bit less there, but basically about the same. When you're looking at the number of pending sales, we also are about the same and a little bit less. Overall pending home sales, we have 531 pending right now compared to last week when we had 544. And then when you're looking at the week over week, the number of homes that went under contract, we had 152 buyers buy homes this week. Last week we had 163. So I'd say both inventory and demand stayed pretty flat overall week over week, as well as the new listings and the new buyers in the last 7 days. So that's pretty interesting. When you're looking at the home sales, also pretty consistent with 157 homes closed in the last 7 days. 146 is what we had the week prior. So this week is kind of interesting to see that everything's kind of lined out. If this trend continues, not necessarily flattening, but if this trend continues where inventory, finally starts to come down and pending sales either continue to cool off very slowly, potentially ramp up a little bit, or stay flat. It'll be interesting to see what happens with our fall market this year. This appears to be what we normally see this time of year. So I'm really excited that it finally looks like the market overall in our area is stabilizing. We're still considered a seller's market at this point. The market dynamics will be out here in a couple of weeks. After Labor Day weekend is when I will be covering those, and we'll be able to dive into what type of market we're in and where we're headed at that point. The big headline for this week, though, is interest rates. After several weeks of volatility, it looked like last week, because over the past couple of weeks prior to that, it looked like last week, and the report that I was reading from Freddie Mac said that interest rates were starting to stabilize. We had 5.25 just about last week, and the week prior we had 5.13. So it was down from 5.25, and so it kind of hovered around there. Well, this week we're up back past 5.5 for the average interest rate nationally for 30-year fixed. So we have 5.5, up almost half a percentage point in 1 week. So that's, again, some extreme volatility there. It will be interesting to see what happens next week if we go back down or continue on that rise. Like I said, interest rates, as far as the reports say, is that they're overall going to be on the rise, but I was hoping that we were going to stay in kind of that happy medium between 5% and 5.5% for a while. But that being said, with interest rates, they do impact buyers and borrowers significantly, so it's very important to understand how that works. I've gone into that in other videos. I'm not going to go into it right now. Unless you want me to, leave a comment if you want me to go into a video just talking about that. But essentially, with interest rates, that 5.5% that I'm quoting is the national average, and that's going to be different for you as the individual and the lenders or lender that you go to as well, because different lenders offer different things. Different rates are offered by different lenders, and they're all competing against each other. And it's not always about the rate when you're shopping for a loan, because there's other fees and other costs associated there. And then you can always do what's calling buy down the rate by putting essentially more money down, more money up front to get a lower interest rate so that your payments are lower over the long haul. A lot of things that you can do with the interest rate there. But we're back up to 5.55% for the average 30-year fixed. Pretty crazy. That's what I have for you this week. Want to keep it pretty short. Next week's another short one, so I hope everyone has a great weekend. It's not too hot or smoky out there, and we'll see you next week for Market Watch.